There is one thing that almost everyone out there is overlooking. I would say almost everybody out there is missing, and no one is really looking at it, or at least I haven't seen a lot of people talking about it. And that's the reason why I want to show it in this video. But the reason for that is I understand everybody's focused on the CPI report, which is, inflations and everything that's going on, the energy crisis. China's still doing the lockdown, in Shanghai with the COVID, and we have the war that's going on over in Europe, and all these things put together, plus supply chain issues, and of course, all the money that we printed back in 2020. Well, at some point we're supposed to catch up to it. So there are so many things that are going on out there that are showing these numbers that we're seeing today, this massive sell-off, because of course the Federal Reserve are going to have to sacrifice the market, quote unquote, to be able to support the economy one way or another. But still, a lot of people are diving into these things, and there's one questions that a lot of people are asking these questions, and most, especially when you're starting out trading or actually investing, you're trying to figure out what is going on. It's like everybody's asking, where is the dip, or at least how long is this thing is going to last, or should I buy now or should I wait? It's like everybody's wondering. Just like think about it, when we were back in 2020 during the pandemic, when we were selling off, it was really hard to tell what's really going on. Like it's like everybody's trying to figure out, what could I use to measure exactly where I think the market is at, to at least give you an idea of how long this thing is gonna last, or when should I really start buying, or should I keep buying now, or maybe should I stop, or what exactly should I do? At least some kind of guidance. I know I've been rambling over and over, but I understand a lot of people are actually thinking about this thing, because everyone is wondering what is going on. You want to have an idea. Yes, what the CPI, whatever it is, all these things that are going on, bad catalyst going back to back to back to back, all over the news, all over YouTube. But what can I look at that can give me an idea of what's going on, and when could this thing could potentially start changing, maybe at least pointing in the right direction? That is what I'm going to show in this video. It's not going to be long, it's going to be short, but I'm going to show you something important. But before that, I want you to look at the chart right here. This is the S&P 500, the SPY, the ETF itself, the SPY ETF. You can see this is the weekly chart, by the way, we literally broke below even some of our major support level. We're really down, and we are heading down. Like if you look, the next support level right now, it's somewhere around pre-pandemic levels, like the all-time high right before the crash of 2020. That was the pre-pandemic, like the week before the crash of 2020. That's where we looks like we're heading so far, because if you look at it, another indicator for this one is this support correspond almost closely where the 200 moving average is at, this line right here. So it kind of gives you an idea of like, hey, this is another major support level if we keep going back into this. But again, I know when everybody else is looking at this right here, everyone is thinking, dude, we have a long way to go. What are you talking? Like, you bearish right now? No, most of the time, when I look at different things, when I do my technicals, I tell you guys, most of the time I'm bullish in a lot of different things, but I always say I need to be fair to show you both sides, because I cannot always tell you when things are going up and up and up. I need to show you on the other side, because you need to think about it this way. The lower usually things go, the better the opportunity is. I always tell a lot of people around, I'm like, how many times do you go to a Louis Vuitton store and you walk in and that really, really nice bag that you wanted to get your girlfriend, your wife, whatever it is, you will never almost going to find it at like $100 almost. And if you ever get a chance to walk in an actual legit Louis Vuitton store, Gucci or whatever, and you're able to buy that $15,000 bag for $100, I think that's the greatest deal of all time you could possibly get. Well, depending on what you put the value into. But it's just an example that I wanted to give you out there, saying that you're trying to compare this and saying every single time things go down, that's really when it's an opportunity for almost everyone, because you're never going to get a chance like this every single, it doesn't happen often. Last time we had it was a very, very long time, like 2 years ago, which was triggered by the pandemic, which is what resulting into what we have right now with everything else. But again, I want to stick to the technicals here because I can ramble all day long. The reason I'm saying this, I want to show you that, okay, this is the first thing I showed is where we broke the support that we're here, we're way below, and it looks like we're heading down to the pre-pandemic old times and not correspond to exactly where our 2-1 moving average is. And the number three, or the third thing is, if you look at the RSI, we're really, really heading down, because if you look back the pandemic level when we had a major crash, we actually went all the way down below this 30 on its RSI, and we went down up to like 20. And if you look right here, we are basically getting close to the same levels, right? We're getting closer and closer to being completely oversold. We are getting, because completely oversold is below 30, and we are almost there. If you look right now, exactly what it's saying, we are 32.60 something as of the moment of the recording of this video. That tells you exactly how close we are to be completely oversold on the SPY itself. And so if I want to show you also something else before I get to the indicator that I want to tell almost everybody that's going to give you some kind of guidance to where we are right now. Just stick with me. I'm going to show it to you. So far, year to date, you can see the Nasdaq is 27% down, which is literally into the bear market. If you look at the S&P 500 year to date, if I go out here, it's 16, almost 17%. So we're getting close to the bears, literally. And the Dow Jones is 12. And so when you look at all this, you keep, asking yourself exactly what can I use as a guidance, when we look into the technicals. Okay. This is some of the simplest one that we usually look at, but I want to show you something here, and I'm going to start it with the Nasdaq. This is called the William R, percentage R, or William percentage range. It tells you every single time, right? You can see every time we go here above 0, and then we have all the way above minus 80. So every single time we have a major crash, like I say, everybody's overlooking. This is an indicator that most people don't look at, but I want to show you this. Every single time we have a major crash, like the 2020 crash, you can see the William percentage goes below minus 80. See that, right? If I go back, boom, December of 2018, everybody remember that. We had another pretty steep crash, right? Like the market really, really pulled back. Of course, the 2020 was a few weeks, major crash. This one took, quite since September all the way into December. So it took a long time, but we pulled back into the bear territory. And you can see that. I want to show you this again. You can see it. We went below minus 80. If I go back 2016, same thing happened. You look here. I need to pull this back. If you look what happened in 2016, the market pulled back, and look how long it took from the top where we were. It was November all the way till February. We were pulling back, and you can see every time there is a major pullback, either it takes months to get there, or the 2020 was pretty much forced in. You can see how far we're pulling back, and this doesn't happen very often. You can see from 2020, and then the one before that was in December of 2018, so like 2 years in between, and then 2016. You see where I'm going with this? You see where I'm going with this? 2 years. 2018, 2 years. 2020. Now, guess what? 2 years later, 2022. Boom. This doesn't happen very often. Even if we go all the way back to 2028, 26, you can see how many times this has ever happened. Most of the time, we stay above. But when this happens, and especially the last, I would say 6 years in between, you can see how this has been a major thing. And every time we reach this level, it usually tends to tell us that we have come close to reach the bottom in the market. At some point, it will start turning around. But that's not the only thing that we have to look at. There's something else that you need to look at. This is the other thing that you need to look at. 200 moving average. I want to start with 2020 again, right here. Everything, when we pull back, guess where we found support? 200. When we pull back in December of 2018, where we found support very close to the 200 moving average. Even though the wick of the candle did not really bounce on it, but we got really close to the 200 moving average. And remember, this is the weekly candles. If we go back into again in 2016, we got very close to the 200 moving average. That is the second thing you're supposed to look at. And right now, if you look, we are getting slowly and pretty slowly closer to the 200 moving average. Right here. We're getting close, my friends. Really close to it. So those are signs that could start telling you what we're seeing, what could potentially happen from now on. I'm not saying today or this week is the bottom of the bottom, because we are in the middle of the week and we have printed a very bearish candle right here. And if we close the week again, like we closed last week with this reverse hammer or reverse pin bar, I can say it, that's what you see in the result into this one. If we close again with the bearish candle, then there's most likely next week is going to be pretty much the same. But again, we are getting close. How close could we get? I want to show you another thing here. You see right here, we've had some kind of support. This is another thing that you want to look at. Even if we don't get straight to the 200 moving average, but it is very much possible that we might have to pull back even a little bit longer, more, to get up to here. If we don't get here, or even if the wick of the candle doesn't get all the way to 200 moving average. I don't want to scare you. That's not what I'm trying to do. I want you to look at it as an opportunity also, but I also want you to at least have some kind of guidance what we look at, because some of these technicals, no one is talking much about it. Not a lot of people, but I want you to see it. Not only the news, everybody can watch the news to see all the catalysts that are out there, but what are the technicals, the data that are telling us really with what's going on and the behaviors of what we've seen before, because patterns tend to repeat themselves, which is why these patterns have repeated themselves multiple times. And in the last 6 years, this is the 4th time it's happening. And it's happening in a span of every 2 years. Just pay attention to this. So now, when you look at all of this, now you start asking yourself, well, what do you mean? Because some of these catalysts have not changed yet. Yes. We can't predict what China is going to do next, or the pandemic, or whatever they're going to stop, because it's an authoritarian government. So we don't know. That we can't control. Can't change that. Whatever's going on in Europe, again, with the war and everything else, we can't control that. We can't change. We don't know when it's going to end. Exactly. So those catalysts are going to be around for quite a little while. But the other thing is the CPI that I want to show you right here. This, we are trying to do something about it. And even though what the result that came out today, we came really close to what we thought would be. Here's the thing. For the past few months, the inflation numbers were going up, and the highest that we reached was 8.5%. But remember what the Fed said, they expected it that in March, the inflation numbers were literally, or at least we reached peak inflation at 8.5, and we should expect it to start decreasing. And the expectation was to be decreasing back to 8.1%. Well, just like everything else, that's an expectation or an estimate. We didn't really decrease to 8.1, but instead we decreased to 8.3. It's still something. It's not bad, but it's at least showing us that the curve is getting up there. But we know that the most important one that everybody was looking at was the core, which is this one right here. Yes, the core increased. If you can see here, the month-to-month gain was also higher than expected at 0.3%. But the most important one was the CPI, the 0.2% estimate, and a 6% increase for the core. That was pretty much higher because if you look at what was everybody was trying to look at, the most important one, or the revolving volatile food and energy prices, the core CPI at 6.2%, 0.2% higher than what was expected at 6%. So the core went up by 0.2%, but the overall went down, or at least on the inflation itself, by 0.2%, from 8.5 to 8.3, and the expectation was 8.1. So when you started looking at these numbers, it's starting to tell you that before we were seeing mostly inflation going up and up and up and up. And then now we're starting to see a curve, like a stagnant, where we think, okay, there could be a possibility that the next month or the month after that, we could start seeing it curving down, which would be a good news for us to start seeing it reflecting back into the stock market itself. You see what I mean? So when I'm showing you, I was showing you into the NASDAQ here, but even if we go back, let's say I pull up the SPY. Here we go. I pull up the SPY here, and we can see exactly what what's been happening for quite a while. And it's been the same. And you can see that we are, if I want to specifically go exactly where 2022 is as of today, you can see exactly where we are. And again, like I said, it's a possibility that we might find our support somewhere right there. It could be if we keep pulling back down, because as you can see, again, the candle that we closed last week on the SPY or SPY S&P, you can see it was very bearish, and we are in the middle of the week, and this one looks pretty bearish so far. But again, this tells you that we are below this minus 80, and it's already giving us signs of where we think the market is at. It seems to me that we are very, very close to what we can call a bottom. I'm not saying it's going to happen today. Again, the recovery process, or staying below this line, it doesn't take 1-2 days to change. You can see it took us weeks to get into here, and even from here you can see it's been 3 weeks ever since we crossed below it until then. It's been 3 weeks. So there is a possibility that before we get even out of it, it might take a little bit longer, because you need to see this is a weekly candle. But again, it gives you some kind of perspective of where we're going. So I'll keep this video short. Like I said, I wanted to be too short, but I've been talking too long, so I'll stop it right here. Thank you guys again for watching this video. Don't forget to smash that like button, leave the comment below what you think about I just presented to you, and give us some of your opinion and tell us what you want to see next for me to go through, or any other companies in specifically that you would like me to, or like us to give you some feedback on it. Thank you again. As for me, as always, I'll see you in my next video. Bye-bye.